Shares of Oracle are sliding after they reported Q1 results. We'll dive into their press release, take a look at Outlook and some numbers posted in this most recent quarter, and as always, jump over into the technicals for Oracle. This has put a big gap downwards, and we'll see if that can be a buy the dip opportunity. As always, if you are new to the channel and find this type of content valuable, be sure to hit that like and subscribe button below. We are so close to 500 subscribers, and it would mean a lot. Shares of Oracle down 13.5% on the day, shares trading closer to $109 and some change. Year to date, this one is still up 30%, even after the big moves downward today. Over the past 1 year, this is up, I believe, close to 50%, as Seeking Alpha has not updated this yet. And even over the past 5 years, up over 122%. This one's market cap has now ballooned close to $300 billion. It does pay a small forward dividend close to 1.26%. I know Oracle often gets compared to an IBM, which is certainly has not executed on the level of Oracle. And while they do pay a much bigger dividend, closer to 4.5% over the past 5 years, this has returned you just 4%, not even beating inflation, really. And so IBM certainly hasn't executed to the level of an Oracle. Now we'll jump into the big reason as to why Oracle shares are down big in today's trade, and that is due to their outlook, as they posted non-GAAP EPS outlook for this upcoming Q2 2024 to be in the range of $1.27 to $1.31. Analysts on Wall Street were closer to $1.33, so even their high end of their EPS estimate coming in below the average analyst estimate, and so certainly that will have your stock re-rated. What analysts over on Wall Street are going to have to likely do is bring down their Q2 estimate closer to maybe $1.30 or below, and subsequently take down fiscal Q3 and Q4 estimates as well, as they'll all come down. And so this stock, while it right now has a forward PE of close to 22, that after all these re-ratings will likely be closer to 25 in my opinion. And certainly this EPS number on fiscal year 2024 will be coming down. Looking forward a few years for Oracle, they're expected to grow in that low double digits range on that EPS side and that high single digits range for revenue in the subsequent 2 years. Now, certainly if they are able to capitalize on generative AI and AI as a whole on their cloud businesses, certainly their bottom line can grow at a faster clip. And so while a forward PE of 20 seems about reasonable, certainly if they can boost their profitability at a faster clip, this can deserve a higher PE multiple and can boost up shares. Now, taking a look at the numbers for this most recent quarter, which was Q1 2024, revenues coming in at $12.5 billion. That was up 9% or 8% on a constant currency basis. They do break down their revenue segment into a few different business units, that being cloud infrastructure and cloud application, along with a couple smaller segments. We see overall cloud revenue coming in at $4.6 billion. That was up 30% year over year. Cloud infrastructure, which is the smaller segment of their cloud revenue, that growing at 66%. Certainly this cloud infrastructure is the unit that benefits from generative AI. And we'll take a look into comments made by the chair of Oracle into this segment in particular. We see cloud application, which is their software as a service, that makes up the majority of their cloud revenue at $3.1 billion. That grew at a slower clip, closer to 17% on that year over year side. Now, comments made by Larry Ellison, who is the CTO and chairman of Oracle, said, "Is generative AI the most important new computer technology ever? Maybe. Self-driving cars, molecular drug design, voice user interfaces, and others, billions of dollars are being invested in AI. As of today, AI development companies have signed contracts to purchase more than $4 billion of capacity in Oracle's Gen 2 cloud. That's more than double of what they had booked at the end of Q4. Large AI technology companies and the leading AI startups continue to expand their business with Oracle for a simple reason, and that being Oracle's interconnected NVIDIA superclusters train AI models at twice the speed and less than half the cost of other clouds." Larry Ellison certainly selling Oracle's cloud to investors, especially when their competition is in the likes of Microsoft, Amazon, and Google. And certainly a partnership with NVIDIA helps in order for that to happen. Moving on to Oracle's statement of income, not the prettiest 10Q to go through, but it is fairly easy to understand, and we'll walk through this one. On the left-hand column, we have 3 months ended August 31st. This was this most recent quarter. In this right column, we compare that to the quarter a year ago. Now, they do break it down as a percentage of revenue, which is nice to see. Not many companies give that percentage of revenues that we can quickly calculate gross margins and net income margins. And in this rightmost column, they give out the percent increase or decrease on a year-over-year basis. And so we have our $12.45 billion of total revenues. That was up roughly 9% year over year. Now, out of that, only their cloud services segment really grew, as that grew at 13% up to $9.5 billion. You see, that is the majority of their revenue, as that makes up 77% of their total revenues. You see their cloud license and hardware revenue segments both contracted, and their other services grew at just 2%. And so certainly cloud services is doing the heavy lifting over at Oracle, and they do have to keep in check these other revenue segments. Jumping over to their operating expenses, you see cloud services operating expenses grew at 26% year over year. So your revenues grew at just 13%, and your operating expenses grew faster at 26%. Now, they do have really good margins on this, as it cost them just $2.1 billion to generate $9.5 billion. Certainly on the hardware side, you see they did a good job controlling operating expenses. As you see, hardware revenues were down 6%, but likewise, the hardware operating expenses were down 12%. We see services was up 15% on a year-over-year basis. Now that was up to $1.2 billion. Sales and marketing, they did a good job controlling, as that was down 7%. R&D up 6% year over year. G&A, they did a good job controlling that, as that was down 4%. All things considered, total operating expenses coming in at $9.15 billion. That represented just 4% growth on that operating expenses side. And so you grew your revenues 9% and your operating expenses just 4%. That will certainly help your operating income, as that jumped from $2.6 billion same time last year all the way up to nearly $3 billion. That was growth of 26% on that operating income. We pay some interest expenses over at Oracle and some income taxes, and we come down to a net income number of $2.4 billion. So right away you can see their net income margins are at 19%. So out of $12.4 billion of revenue, 19% of that, being $2.4 billion, flows all the way down to their bottom line. You see, from a year ago, that was up nicely, as a year ago their net income margins were at just 14%. So that represented 56% growth on that bottom line, which is very solid to see from Oracle. You see their shares outstanding are slowly increasing, and so this is still surprising that Oracle is still diluting shareholders, although at a very small scale, but it is still happening. Overall, this most recent quarter seems quite strong. You see revenues growing at 9%, while not wildly explosive growth. Certainly they were able to drive efficiencies in their business and then grew their bottom line at a much faster clip. Certainly it's the subsequent and upcoming quarters that investors are worried about, and the slowdown in bottom line growth there is what they're really looking at. Moving on to the balance sheet, we have $11.5 billion worth of cash over at Oracle. That is up roughly $2 billion from same time last year. Total current assets coming in at $22 billion. Total assets totaling up to $136 billion. Moving on to liabilities, we see they do have more current liabilities than current assets. However, it's important to note they do have a ton of deferred revenues, and we saw this out of Salesforce and as well as DocuSign last week, where they do have a ton of deferred revenues. And so what that just means is Oracle, operating on longer term contracts, have provided their services to their clients and will receive payments for those services in subsequent quarters. And until those payments are received, they have to count that as deferred revenues and put that in their liability section. But over the upcoming quarters, that is moved over to their revenues and then over to their assets. So while their current liabilities do exceed their current assets, in reality, if you were to strip out these deferred revenues, their current liabilities would be much less than their current assets. And so Nothing to worry about on a balance sheet basis over at Oracle. Moving on to the statement of cash flows, we bring down that $2.4 billion net income number. You see, same time last year, that was at just $1.5 billion. So roughly a $900 million increase on that net income line. We get to add back some depreciation, amortization, roughly $850 million worth of stock-based compensation. That was up just $100 million from same time last year. You see, they do have a very strong net cash provided by operating activities number. So on a free cash flow basis, if you were to annualize this roughly $7 billion number, that would get you close to $28 to $30 billion. Now, this is a company with roughly a $300 billion market cap after the big fall today. And so not trading wildly expensive on a free cash flow basis. Roughly, you can put a 10, 11, maybe even a 12 times multiple on that cash flow side if you were to annualize these numbers out. Over the last 3 months, Oracle spent roughly $1.3 billion on CapEx. That was down from same time last year. It also looks like on this acquisitions line, same time last year, Oracle had completed a massive $28 billion acquisition, which they financed by issuing senior notes. So Oracle having to raise debt in order to do that acquisition. If we take a look at their balance sheet, yeah, certainly they don't have enough cash to cover an acquisition of that size. And so it was either diluting shares or tapping into the debt markets, which looks like that's what they did. And so certainly they issued that much debt and they kind of just repaid it over this most recent quarter by up to $1 billion. They paid out some dividends in this most recent quarter, did some buyback, and issued some more shares. All things considered, Oracle added roughly $1.8 billion onto their cash pile. It's hard to compare this from a year ago, as this big acquisition kind of skews the cash flows for Oracle same time last year. Moving on to the technical chart over at Oracle, this is a 1 year time horizon, and so each candle represents 1 day on this chart. Certainly Oracle was locked in an uptrend since really October of last year, and from its lows made back in October, it is now up 80% and was up over 100% before today's big decline. I see in the after hours now this is closer to $110 and some change. Certainly Oracle making a big gap downwards. You see even on their last earnings report, they made a big gap upwards, and so in a sense almost just filling a volume there. If you take a look at Oracle on this 1 year basis, you could actually still make an argument that Oracle is still in an uptrend, believe it or not. And so this was an uptrend that was getting very steep, and now it has sort of come back and retested the bottom end of this uptrending trend line. And you see since October of last year, it's tested this line only a handful of times and generally has traded above that. Now, with a fall so steep, it's hard to see this one staying above this trend line. I do see Oracle falling below this trend line, and so in that case, this uptrend would be over. However, if we do see a reversal at these levels, if Oracle stock can stabilize and sort of even just trade sideways for the next little while, yeah, this uptrend can remain intact until broken. And if that is the case, Oracle can certainly be bought on this dip. Now, I wouldn't run in and jump to try to catch this falling knife. I would wait to see how Oracle trades out over the next few days. In terms of levels of support and resistance, the first level of support I do see for Oracle, that being at roughly $102 per share. Doesn't have a whole lot of support, but it did test this level once back in May, and then it broke through that and raced to new all-time highs. Below that, I do see a bit stronger level of support, closer to $100 per share, even down to this $96, $97 per share. Those are the two levels of support I would be watching if Oracle does tend to break through this trend line. Now, on the upside, it will see certainly resistance on the way up, closer to $114 per share. Certainly lots of people have made money in Oracle stock over the past year, and they will be looking to take profits up over at these levels. And so now Oracle, we'll see if it can sort of trade in between this range or continue on this uptrend higher. In my opinion, I would wait to see how Oracle trades out over the next few days. Certainly with a reaction so steep, it can post subsequent days of smaller red candles on waning volume. That was a look at Oracle. It did post a very strong past quarter. However, if you look out into the upcoming quarters, certainly their growth is expected to slow down, and these EPS numbers and forward price to earnings estimates would be needing to be re-rated. Certainly not a wildly expensive stock, but is not a screaming buy to me at these levels either. I would wait to see how Oracle trades out in these next few days. Let me know your thoughts on Oracle in the comments below. Do you think this is a buy the dip on this massive sell-off? As always, thanks so much for listening, and I'll see you guys in the next video.